Good morning, it's July 2nd. This is to my liberal friends. Yesterday, the Senate passed their version of the tax bill, and immediately Democrats started calling it a tax cut for the wealthy. I'm not sure how they came to this conclusion because the major part of the bill was simply to extend the tax brackets that have been in effect since 2017. And if the truth is told, Democrats were all for keeping those tax cuts for everyone, but the upper bracket remains at 37%. They would prefer that bracket go back to 39%. It then forced us to look at what is in the bill, and that would make them say that there's a tax cut for the wealthy. Would it be the child tax credit that's in the bill? I don't think so. Under the current law, the tax credit's $2,000 and it would revert to $1,000 if the bill's not passed. But the bill would increase the child tax credit by either $2,200 or $2,500 in the House version. Would it be the raising of the standard deduction that allows 90% of filers to use it? I don't see how that's a tax cut for high earners. The standard deduction will increase to $31,500 or $32,000 depending on which version. That's a tax break for the middle class. The tax bill does include a provision that allows workers who do overtime to not be taxed on that pay. It also has a provision that excludes tax tips for service industry workers up to a limit of $25,000. Not exactly a break for the wealthy people. Perhaps they're confused about the provision dealing with green energy tax credits, especially for those wind and solar, that were passed by Democrats in 2022 as part of the Inflation Reduction Act, which had nothing to do with inflation. The bill cut some of those credits and also cut the tax credit for electric vehicles. Anyone familiar with who's buying EVs knows it's primarily high earners that benefit from that tax break. The Senate version did omit a contentious change they proposed that would place a new excise tax on wind and solar projects if they contain components manufactured in China. Taking a look at the student loans and other education issues, the final bill that would introduce numerous changes to student loans, including limits on borrowing and consolidations into only 2 repayment plans. Republicans want to cap graduate level funding for students at $20,000 a year, and at $50,000 for law or medical school government loans, and at $20,000 for Parent Plus loans for undergrad students. These provisions put some sanity into the student loan program. If passed, student loan borrowers will have 2 repayment options, a new standard plan and a new income-driven repayment plan. Under the latter, starting in 2028, borrowers will have access to the repayment assistance plan and the income-based repayment plan. That's a deal for lower-income students. It would also eliminate economic hardship and unemployment deferments. The bill does allow loans to be rehabilitated twice, up from once before. Pell Grants, which benefit lower-income students and some middle-income students, will get additional funding in 2026 and will correctly exclude those students who have full-ride scholarships to school. Then we have to look at some changes in how Social Security is taxed. Many Americans age 65 may be poised to see some major additional tax relief. Trump promised to end tax on Social Security, but could not completely obtain that goal. But the bill does include some key language that would give additional tax deductions to senior citizens. The version that passed in the Senate Tuesday includes a $6,000 per person deduction compared to the House-passed $4,000 deduction. Both are going to give an extra deduction to senior citizens. The tax savings for a married couple with $100,000 of income would be about $1,600 a year under the Senate plan. That amounts to a bit less than half of the savings that were in no income tax on Social Security benefits. Under the House bill, it would be about $1,200. Under the Senate proposal, 88% of people 65 and over wouldn't pay income tax on Social Security. Currently, 64% don't pay. The senior bonus deduction is designed to benefit people who earn modest incomes. It would help some who aren't getting Social Security benefits, like seniors waiting to claim benefits at age 70. The lowest earning seniors already pay no federal income taxes, so they wouldn't benefit. The highest earners make too much to qualify, and the proposal wouldn't help Social Security recipients who get disability or survivor benefits before age 65 or claim retirement benefits early. But all these provisions are aimed at the middle class and getting them more spending income in their pockets. Upper income earners will not see those tax breaks. So when you hear Democrats talk about the bill being a tax cut for billionaires, ask them how they got to that point. Ask them about the multiple provisions aimed at the middle income people. Ask them about the increased deduction for Social Security recipients. Now they're going to get a strange look on their face and tell you that you just don't understand. But it's you that does understand, and that's what scares them. It's been To My Liberal Friends. Thanks for listening.